Hello traders, Corey Mitchell here with TradeThatSwing.com. We're going to talk about checklists today. This is one of the, I would say, required documents that you should have for trading. It's very helpful. We're going to talk a little bit about how checklists will progress over time as well. So I have an article on this with a bunch of examples. So the first thing we're going to talk about, your document. So a trading plan outlines what you're going to do and why. Your daily routine helps you create some consistency around what your day is going to look like, what your trading looks like, moving from task to task. That'll include when you're going to review. Some people like these very rigid, other people like a more flexible routine, but the point of doing it is that you end up doing those things. You're checking them off, making sure you do your daily review, your journaling, whatever it is. So the daily routine helps with that. Your pre-trade routine gets you into the mindset for trading well. It's going to give you some things to focus on during your day. Your checklist is kind of like a cheat sheet for while you're trading, what you need to be checking on the trades that you're taking. A checklist is also very good for commentating. If you've followed me for any length of time, you've probably heard me mention commentating, which is when we talk through our trades and just keep a running dialogue while you're trading about what's setting up, what are the conditions like, are there any trades setting up, why or why not, what would make a good trade setup. We just go through constantly basically what's on our checklist. So checklists will change over time. Before we get what to include on them, it's important to understand where you are in your understanding of your strategy. So a checklist will start out as very technical, let's call it, where you might write down things like make sure this wave, is only a portion of this other wave, wait for the consolidation, it should be 2 or 3 bars, we need this much movement. It's very, you're focusing on some tiny details of the strategy. And any checklist really should include the things that you really need to be reminded of. There's no point putting something on there if you already know it off by heart. So yeah, don't waste time just filling it up with as much. You might want to have a very thorough checklist somewhere, and that's totally fine. But the one that you're going to have by your desk for reference, make it quick, make it short, so that you can quickly look at it and look at your chart or however you trade and say, yeah, you know what, these all match up, I can tick them off. So over time that's going to change. It's going to go from very technical, right, because you're going to get used to some of those things. They're going to become more automatic, only looking for when there's big movement. If you're not having a problem trading in low movement, then you may not need to put that on. If you do find you overtrade in low movement, then you want that on your checklist. You want to be reminded of it, to only trade in good movement as much as you possibly can, because you have a problem with that. Over time, that's going to become less technical in the sense that most of my checklists now, for me, are, I may draw, a little chart. I like to hand draw sometimes just to reinforce what I'm looking for. And so I may hand draw something. I may write down what I need to be reminded of. So mine are more like, right now I'm working on holding for bigger moves. So I write that down. It's not as much the super tiny technical details. It's more about, another thing I have on my list right now is to try to dumb it down while I'm trading. I have a tendency to overthink, overanalyze, when really if we know what our strategy is, it's really just following it. So my kind of mental thing right now on my checklist is that I want to think of myself as basically like a minimum wage employee, just following a plan that's been given to me. I don't care about how much profit it makes or anything like that. My goal is just, hey, follow the plan that's been given to me, and that's my job. Outside trading hours is when I can do all the thinking and the analyzing and the review and improve on profits and see where we could have made more, saved some risk here, made a little bit more on profits there. But that's outside of trading. While trading, I'm really trying to keep it dumbed down. So that's on my list. So it's more psychological stuff. So be aware that your checklist will change over time. I recommend update it as much as you need it. I would say your checklist probably needs to be updated monthly. Come up with a new one. Have it by your desk. If you notice you're starting to skip over some things and you're not having an issue with them, those can be removed. You can cross them out. But you may notice some other things pop up. Maybe you're a little too eager to get into trades. You might want to add that into your checklist. So a checklist is a dynamic document. And yeah, you might have your master trade or your master checklist, like I said, which kind of includes everything. But for while you're trading, to keep you on task, on point, focused on what you should be doing, I would definitely say keep it to what's relevant to you right now. If you're new and starting out, you might not know what to include on a checklist. So I do have this page here you can go to. If you just go to tradethatswing.com and you search in checklist, this article will come up. I'll also link to it below the video. And I have lots of examples. Some, again, very technical. As you progress, they might just become more psychological. But here are some of the things that you definitely want to include on a checklist. One thing to note is that if you're a day trader, your checklist, you might have to go through it very quickly, right? Because trades are flying at you. If you're trading a 1 minute chart, you might, you get a price bar. It's like, if the next bar sets up correctly, you could be getting a trade. So you have kind of less than a minute to go through everything you need to go through. If you're on a daily chart, you're swing trading, you're putting out orders at night, there's less of a rush. You maybe have more time to go through a more thorough checklist. Either way, have a checklist. Here are some things to include. I always like looking at market conditions. Market conditions are very important. That's like our context for the trade. You've probably heard some other traders talk about context and how important it is. It's very important. You can have a beautiful setup, let's say like a triangle pattern. But if the price has been moving like this sideways for a year and you get a beautiful triangle, does it mean anything? To me, probably not. We're still stuck in that bigger range. Whereas it means a much different thing when you have a big uptrend, then you have a little triangle and the price starts breaking out of it. That's a much more high momentum, less odds against us type situation, at least how I practice and how I trade that strategy. Whereas if it just occurs in the middle of a bunch of choppiness, who cares? That's not the trade I want to take. So context, very important, more important than the actual pattern we trade. If a triangle's not that great looking, but we have incredible momentum, I just want to be in on that momentum. So even if the pattern's not as perfect, I'm still more likely to trade that because conditions are so good. So conditions, very important. You really want to put in work in your strategy to find out what conditions your strategies really do well under, what conditions they don't, because that's information you're going to want while you're trading. This pattern works really good in these conditions. I'm going to take that one. Same pattern, different conditions, I tend to lose on it, so I'm going to stay out of those. Are there any news events that are going to occur during your trade? So if you're day trading, is anything coming up imminently that could affect that trade? If you're swing trading, what could come out? Are there earnings coming out in a stock? Is there an interest rate announcement in a currency that you're trading? While you could potentially be in that trade, that's information you'd want to know. That's information you want to check. You do not want to be all of a sudden blindsided by a huge move that you weren't expecting, and you end up losing a whole bunch more than you thought. Are you taking the correct entry point based on the strategy? So maybe you missed it and you're now in hope mode and you end up punching in way later than you should be. Now that throws off your risk reward. Basically, this strategy says enter in this price area. If you're not getting it, then we don't take the trade. So is it a correct entry point based on the strategy? How's the risk reward looking? Is the stop loss a reasonable size for the potential move you're expecting? How am I going to get out of this trade? Not necessarily a check mark trade where you can just say, yeah, I'm going to get out of this trade. How are you going to get out of this trade? Some traders have very detailed or multiple exit rules, whereas others have very simple rules. It's either going to hit their stop loss or their target. That's a very simple exit rule. Others have me. So I have multiple exit rules. I can exit at a target. I exit if it almost hits my target and then starts to reverse. I use a trailing stop loss on some of the position. I will exit some on volume spikes in stocks. So multiple exit rules. So my checklist, I'm talking myself through. How am I going to get out of this trade before I even get into it? On that note, the idea of this is to keep us engaged in our trade, to keep us focused on the correct things so that we don't just become impulsive. We're letting random thoughts go through our head and all of a sudden we're acting on them. If we are constantly kind of thinking about these things while we trade, we're less likely to have those impulses. So by going through and actually thinking about how am I going to get out of this trade before I take it, I'm going through that list of, if I get a volume spike, I'm going to get some out. I'm going to trail my stop loss below the swing lows as they move up. I also have a target out there at where I think it ultimately could run to. And so those are all how I'm going to get out. And it's just a good reminder so that once I'm in that trade, I can keep going through the checklist as well. It's not just before the trade. It's once this trade gets going, what's still relevant on my checklist, how I'm going to get out of that trade, that's the most relevant thing. So I'm going to continually talk myself, why am I following my exit rules? Well, because I've tested them out. They're the most profitable. My impulses don't usually work out to my advantage over many trades. So I'm going to stick with my exit rules. I'm going to exit, this way, and this way. And as long as I do that, I'm less likely to all of a sudden just hit a button to get myself out of a trade because I'm panicked. I'm talking myself through the whole time how I'm going to get out of this trade. Am I violating my trading plan in any way? Good question to ask. Maybe you're trading in the middle of the night when you're not supposed to be. You only trade during, a set couple hours during the day. So basically, you're not used to trading that time of night. You might be violating your rules. Maybe you've already lost a whole bunch of money today and now you're still taking this next trade and you're going to potentially go over your loss even more. Of course, we hope you win, but you've already violated your trading plan by continuing to trade past a certain point. Some additional things you might want to include, so like we just talked about, am I violating any of my trading plan rules? That kind of goes along with this. Am I allowed to trade? Maybe you had a rough week last week and you said, I'm not going to trade this week, and just to give your mind a break, and now it's Tuesday and you're already jumping in after only having taken one day off. You might need a little bit more time. Am I placing orders in the correct hours during my established time frame when I've actually practiced and rehearsed and reviewed trades on this time frame, on these hours of day? Like I said, trading in the middle of the night. Just because we can trade profitably during the day when things are active does not mean we'll necessarily be able to trade profitably with the same strategies at a different time of day. You would need to test that out before you can just jump in and start trading real money. Is this within my max number of positions I can hold at a time? It's a good one. Lots of people, they just get a little anxious or antsy to trade, and they just start getting into a bunch of trades, and all of a sudden they can't juggle them. Think about that. Again, if there's things on here that you haven't thought about, there may be a hole in your strategy or situations which could arise eventually, which you'll want to, if you can think about them now and have a plan for them already, that's even better. So max number of positions is one of those things you want to think about. How much do you think you can actually handle? Assuming, some are going up, some are going down, how much can you juggle at one time? Are you within your leverage tolerance or your risk tolerance? Did I find this trade by the proper means? I like this one because I find so much on social media, especially, like people are just looking for a tip. They want, what stock's going to go up? What currency pair is going to go down? Where do I get into this one? Where do I get out? They're looking for a tip. And even if you're trading the same method, like trading's constantly evolving. So, even if someone was trading the same strategy as me, on a particular week, like we already talked about, I might have different exit rules because right now I'm going for big moves. I want to try to be in. So usually I'm going for, let's say, a 3-to-1, 4-to-1, 5-to-1 reward to risk on a target. But this week, I really want to try to maximize my gains. I feel conditions are good, so I'm just going to use a trailing stop loss. And so now I'm trading a slightly different strategy than what someone else thinks. They want a tip. I say, I like this one. I don't know. They make a little bit or they lose a little bit. I make a little bit or lose a little bit. But it's not based on their own research. They didn't go out and find that trade. They don't have the confidence in it. So when I take a trade, I like to go through my process of going through the checklists, all this stuff, making sure it aligns with who I am as a trader and the things I want to trade, because then I'm going to have more confidence. I'm going to have more confidence to follow my plan in that trade. Whereas someone who simply takes it based on, well, Corey said to get into this trade, they might not have a lot of confidence in that trade. So it might go up a little bit and they take their profit. But over many trades, that's not good. If they can't follow the rules, if they can't follow their own rules, they don't have confidence in their trades, it's not going to end well. We ultimately need to put in that work ourselves to find the trades and to know how we're going to trade them. So I am never interested, it doesn't matter who they are, I'm never interested in someone else's trade. It just does not matter to me in the least. And it's kind of like one of those, the grass is always greener thing. If you're always looking at other people's trades too, it's gonna just distract you from your own. Now you can look at some historical trades and see what they're doing, how maybe you could implement some of those things. But in terms of like a current trade, I could care less about someone's commentary on the market. I put out my own commentary for myself. And I just happen to make it public. But even the website is really my own thoughts and insights on trading, and I put them in article format so that if others like them, they can use them. But yeah, always find your own trades by your own means. What should I remember during this trade? This is a key point. This is one of those dynamic things which is going to change. It could change daily, but I would say it should change probably at least weekly or monthly, because if things should change, right? If you were having a problem with early entries and you focus on it every single day, that should not be a problem or as much of a problem a month from now. Something else might pop up that we've noticed we're not doing as good with, and we can start focusing on that. But those key things that we've been working on and struggling with should change and be rotated out as we get better at them, and things that we notice aren't as good at lately will come in. Am I in the right mind frame for this trade? A very good checklist item. If we are feeling extremely angry, overconfident, not revenge trading, it is better, don't even think about it. Just push back from the desk and go for a walk. Do not trade unless you have a protocol for handling these things. So I have talked about in a couple articles, I trade pretty good when I'm angry. Actually, I probably trade best when I'm somewhat angry, because I have a process for channeling it into really following my plan, as opposed to other people who, when they get angry, tend to abandon their plan. So it depends how you channel that emotion. If the emotion right now tends to cause you to do bad things, then don't even think about it. Push back and go for a walk. If you can channel that anger, and I can legitimately say before I'm about to take a trade, yeah, I'm really angry, but I'm also hyper focused on following my plan. This trade's good. It checks all the boxes. So you can be angry, but also still keep your wits about you. Then you can still trade while you're angry. But if you can't control that anger, then you're going to want to step away. And that might be something you want to work on. How am I going to handle that while trading? What can I do with that anger? Something to work on outside of trading. So that's the checklist in a nutshell. And again, you would make this your own, put the things that you want on. These are ideas. For trading contraction patterns, this is a swing trading stocks pattern that I like. So this would be an example of a very specific checklist to that. And you're going to notice that this would be kind of like the beginner's checklist, because it's very technical. It's for someone who's just kind of learning the pattern. And then once they learn the pattern, they have a lot more things memorized. Then some of these might become more psychological. But is it on my scan list? Are the market health indicators okay? Strong uptrend, not chop. We want strong uptrend, then contraction. Contraction size smaller than prior contractions. That means extremely large patterns are less reliable, in my opinion, for this type of action continuation, than smaller patterns. Different topic for a different video. And then these are kind of the specific things that I'm looking for in that triangle. So like the drops, how do they measure out relative to each other? Historic moves, presenting at least a 3-to-1 reward to risk, ideally a lot more with room to spare, so I can be conservative and still get a 3-to-1 if we kind of get the moves from the past that we've been getting. If we extrapolate those out, then I should be able to get 3-to-1 on the next pop. No earnings within a week or so of entry. If it's a slow moving stock, you might want to give it 2 weeks because it's going to take time to actually move into profit. 3+ day consolidation, or 2 days with a false breakout out the bottom if this was a long trade. Top quality pattern. This is looking at the kind of textbook examples as well as what else is out there right now. Is this a good trade? We'll often be confronted with whether we're trading Forex or stocks. With Storex, we might have 5 of the same pattern setting up in 5 different pairs. Which one do we trade? Which one has more quality elements? Which one's moving more? In stocks, same thing. Which one really epitomizes like a top quality pattern? Strong movement, setting up nice. Maybe we get that little tiny false breakout we were looking for in the opposite direction before we take the trade. Those are all things which might push us to one trade over another. Am I in the right mind frame to do that? Euro USD, rounded bottom pattern. Again, same thing. This is very more technical. A few things you can start to watch for, like are people likely to be screwed at a certain area? That's a catalyst. When you have lots of orders that are likely to be triggered at a certain area, that can be a catalyst for moving the price very quickly in our favor, or if you're on the wrong side of it, very quickly against you. So you can start looking for those levels. That's kind of a more advanced thing that you can start looking at with any patterns you trade. Forex price structures, again, very technical. Mental trading checklist. So here's where we start to add in the mental elements. Very important. Yeah, so whatever you've been struggling with, working on, this was one of the things I kind of wrote to myself quite a while back, but still very relevant, and I'll often pick some of these things out to include on my checklist, because I've noticed that things kind of go in cycles, right? I'll be trading really well, and it might just be the market conditions that are really good. So we start to get a little bit relaxed, and I'm checking emails while I'm trading. Something like that happens, and then all of a sudden I realize, like, man, I missed a couple trades yesterday because I was distracted. So then all of a sudden, after a few months of trading really well, all of a sudden I need to bring in a bunch of reminders in my pre-trade routine, in my commentating, in my checklist, that my job is to commentate and to stay focused, because I've moved away from that somehow. So it's always, as I said, with these checklists, it's always things kind of cycle in, and then we forget about them for a while, and then they might become a problem again, and they cycle back in. So keep these dynamic, update your checklists regularly, and yeah, I hope this helps you out. Put time into the checklist. Don't just make it something, oh, Corey said I should do a checklist, so I'll write a few things down and maybe I'll look at them while I trade. No, like, be invested in that checklist. Make it so that you feel, when I look at this, I'm going to make less mistakes. And then when you're going through your trades during the day, and even in between trades, look at that checklist. Why am I not trading right now? Well, because conditions aren't right. What would setup? What does an ideal setup look like? Start building out the trades in your head. Keep yourself engaged in the checklist, in that productivity or trading productive mindset. Whereas if we're just kind of letting our mind drift all over the place while we trade, that's the moments where all of a sudden you see a green flick on your chart, and before you know it, you're hitting a button to enter an impulsive trade. Keep the mind engaged in the checklist throughout. If we do, we're much less likely to make mistakes. We're going to follow our plan better. We're going to be able to, when trades do occur, we're ready to pounce. When there are no trades, we're talking ourselves through why we're not trading. Yeah, a lot less impulsive trades. So I hope that helps you out, and happy trading.